Good morning, I'm Andrew Topp with Investing News Network, and I'm here at the Cambridge House show with Jordan Roy-Byrne. Jordan is a publisher of the Daily Gold website. Jordan, thanks for joining me.
Thanks for having me on.
So last week you wrote in a column that we've reached the bottom for gold mining stocks, and you mentioned again in the presentation yesterday. So many investors will be pleased to hear that we've reached a bottom, but we have heard that before. So what's your evidence for us reaching a bottom?
Well, there's several things. And specifically the call that I'm making is, I would say on all of the gold stocks except for the seniors. So, I mean, in Canada, the way we look at juniors is kind of 100 million and under as far as market cap. And then in the US, juniors can be much larger. If you look at the GDXJ, the juniors there can have from 100 million to 600 million market cap. But for GDXJ and the juniors in Canada, I believe that I strongly believe we have hit a bottom. And the reason is, if you look at all bear markets in gold stocks going back to 1938, and you put these on a chart as you saw yesterday, compared to the other bull markets, when you look at how far we've gone in terms of time and price, it's very, very difficult to make a case that the bear market hasn't ended. In December, I was looking for a final plunge because looking at that chart, I thought if we get a final plunge, then that's going to be it. There's no way it's going to go any longer lower. We didn't get that final plunge, and when it really should have happened in December, a time that was ripe for it, and the gold stocks turned up, and they've been climbing since then. And so you have to take notice of that price action. And also in December, sentiment was really negative. I mean, looking at a variety of indicators, we were at 10-year lows, 11-year lows, 12-year lows. And so again, to repeat myself, that was a time when the market was really ripe, and the stocks specifically, to make that final bottom, or at least plunge to a final bottom, and that didn't happen. We've seen the positive price action. So, I mean, just looking at everything, I mean, I strongly believe that we've bottomed in the stocks.
Great, and again, that's good to hear. So in that column, you made the distinction between gold juniors and gold seniors. So you say that the bear market, though, for gold seniors is still with us. So assuming that we do get an uptick in juniors, and as you mentioned, the stocks are starting to tick up, will that lead to higher stocks for the seniors?
I think it will. It's interesting. If you go back to the beginning of this bear market in the precious metal sector, it really started to begin at the end of 2010. You saw stocks started to peak then. Then you go to the spring 2011, silver peaked, the juniors peaked, silver stocks peaked. But then the seniors peaked along with gold in August 2011. So it makes sense that the juniors and those other sectors are bottoming first. But looking at the seniors, I mean, I would say we're probably at a bottom. With the juniors, I think the evidence there is really bulletproof, whereas with the seniors, the evidence is pretty good. So, I mean, that's kind of the distinction I would make. I mean, I think the whole sector of stocks is bottom, but, I mean, it's a table pounder on the juniors, and for the seniors, it's probably, but we don't have quite as strong of evidence yet with the seniors.
Okay, so maybe more of a wait and see. What about all the write-downs, layoffs, and dividend suspensions? We've heard some pretty bad news about gold producers. What would you say to investors about gold producers right now?
Well, I would say the bad news is priced in for the most part. I mean, when we saw gold plunging in April, the market is a discounting mechanism. It looks 6 to 9 months ahead, and the market saw that with a lower gold price, a lot of these companies would be in trouble. So a lot of the bad news is already priced in. I mean, there could be some cases perhaps coming up, companies here and there that still have some bad news to report. So I wouldn't say it's completely done with, but I think for the most part, the worst is over with regards to the large producers.
Okay. The gold price is still under the price needed for many producers to meet their per ounce costs. Will we see more pain from the majors this year, do you think?
Yeah, I think we could see a little bit. I mean, I think there could be a couple companies out there. I won't name names, but I do think there could be a few companies out there that still have to write down some assets. And there are some companies that have assets that are not economic at these prices. But Andrew, the good news is this environment has forced gold producers to be more efficient with their capital. I mean, it's a no-brainer, but you look back to earlier, before we had this cyclical bear market, the gold price was just going up every year. Sure, we had corrections, but every calendar year it was going up. And so, I mean, that makes people get fat and lazy, and they get accustomed to that, and they get accustomed to not being efficient. And so the flip side to that is, we have been in the bad times, but that's forced these companies to really cut back, really look at the assets that are going to be economic at these prices. So yes, there could be some more bad news, but what has happened is going to be very positive in the coming years when we get back into a cyclical bull market for precious metals.
Yeah, okay. What's your take on the gold price? Do you think we'll see the Fed chipping it down further with more and more reductions in QE this year?
That is possible. I mean, there is an important Fed meeting coming up at the end of the month, and as a technical analyst, you like to look at long periods of time. How do stocks close the week? How do they close the month? And this first month has been very strong, so we'll have to see, is gold going to be able to keep its gains? Is it going to be able to close over 1280, maybe over 1300, or might the Fed say something that'll sell off? I mean, you really have to watch how the market reacts to what the Fed says, because the taper initially, that was bad news, the reaction over the first couple days. But since that, precious metals have actually performed very well, and they've outperformed U.S. equities. So everyone thought that, the taper is going to be really bad for gold, but since that has happened, precious metals have performed really well. So again, I'm less concerned with the news. Watch how the market closes at the end of the month. And I will add that I do think I'm less convinced that the metals have bottomed. As we discussed earlier, I'm most convinced it's in the shares. It is possible that we could see a final low come later this year in the metals. And if you go back to the 2000-2001 bottom, it was a staggered bottom where the gold stocks bottomed in November, and then gold made a double bottom in February and April. So, as we said before, the stocks have been discounting this bear market before gold, so it makes sense that they're going to turn up before the metals. And so it is possible that we could see a little bit more weakness in the metals, but if that happens, that is going to be, I don't want to say your last buying opportunity, but as I showed in my presentation, after gold bottomed at that time, the shares absolutely exploded after gold bottomed. So that's something to kind of keep in mind.
Yeah, okay. Let's take the discussion back to gold explorers. Many of these companies have been washed away. They haven't been able to raise money in the market, so they've had operational problems. Are we in a situation now where the fittest gold companies are still around? I'm talking about gold explorers, and the weaker ones are gone. Where are we at, do you think, in terms of survivability right now?
Well, we're starting to see the strong companies have had some really good share price rallies in the last month or so.
Yeah.
So it's becoming more evident, who really has the goods, who has the capital to be able to continue, who can raise capital at good prices and on good terms. A lot of the penny juniors that are still there, they're struggling to keep the lights on. I think eventually more of those will go away. I mean, the upturn in the market, that's not going to help you if you have a project that's uneconomic and you can't raise money on good terms. So, I think we're going to see a lot of those go away.
Okay. Do you have a favorite jurisdiction right now for gold explorers? We've seen some nice results from Pro Mines, for example, in Ontario, and Corvus Gold in Nevada. Where do you like in terms of gold exploration?
Yeah, those are two of my favorite areas. I think Quebec, Ontario, and Canada, and also Nevada. Those are very good areas. I still like Mexico. If you look at companies that are in Mexico, some explorcos and also producers, their stock prices are still performing fine. If this issue with Mexico was really negative, at least at this point, you would see that reflected in the market. The companies who operate and explore there, those share prices would be underperforming, and we're just not seeing that. So I would caution people, don't go away from Mexico. One company told me that the law is 500 pages. The lawyers and the accountants haven't even gotten into it yet. So, looking at it by itself, I think it's a negative, but it may end up only being a tiny negative. That's what the market is saying right now. So, to repeat myself, those are the areas I would look to: Nevada, Quebec, Ontario, and Mexico. And also, to add one more, I would talk about West Africa. I personally haven't looked much into that myself, but we're hearing more about that at the conference. People who are experts in exploration are talking about that. The stocks there are starting to perk up a little bit, and so that's telling you something. So I would also keep an eye on that area.
What junior gold stocks are you following in 2014?
Well, I'm following, of course, as many as I can.
I guess I mean gold stories that you find interesting. Junior gold stories.
Well, I like what Corvus Gold is doing in Nevada. I mean, they're performing fantastically. I'm a shareholder. They're sponsored by website, just to give a full disclosure, and also everyone should do their own research.
Yeah.
You should take the word of anyone you see on camera. But I like Corvus Gold quite a bit. I like Caden Resources in Mexico.
Okay.
Is another one I like.
Yeah.
I'm not familiar with the Probe Mine story, but there seems to be a similarity there with Corvus, where they both started out with they found some low grade, and now they've discovered high grade, and you can see both those stocks have performed really, really well. And they started to perform well before the bear market was over.
Right. Okay. Great. Well, that's some good recommendations for investors, and it's been great talking to you, Jordan.
Thanks for having me.
I've been Andrew Topf with Investing News Network at the Cambridge House Show. Thanks for joining me.